David and Goliath fight in financial markets. Small investors are up against billion-dollar hedge funds and want to beat them. They use short squeeze to do so and use social media to organize a joint attack. Hedge funds exit the market with huge losses, GameStop's share price skyrockets and the financial market has a new experience. But let's not get ahead of ourselves and tell the whole story. Welcome to Invest with Jiri, a channel dedicated to working with money. How to make money, how to protect it and how to multiply it. If you are interested in investing, check out my Patreon where I create content for passionate investors. In today's video, I recap the events that have been sweeping the financial world. Some people made incredible profits and others lost everything. We've got a few interested groups covering GameStop's stock price during the period under review. GameStop and its underperforming business. Hedge funds that want to make money shorting GameStop. Small Reddit investors intent on short squeeze. Retail traders looking to ride a media frenzy and make a profit. The Robinhood platform which retail investors are trading through and which is under a lot of pressure. The Securities and Exchange Commission watching the whole scandal. How much did GameStop stock go up during the short squeeze? Before the end of 2020, GameStop's stock price was in the $1 range, only to reach an intraday price of $483, which is $120 today after a fourfold split, after the short squeeze in January 2021. If we look at the daily chart, we see that the price rose from 12th to the 20th January 2021 by a whopping 1,650%, from a price of $4.50 to $87, to get a price of $10 on 19th February 2021. After that it rose and fell dramatically several times. Now in August 2023 it is at $23. Why were hedge funds short at GameStop? Hedge funds such as Melvin Capital Management and Citron Research identified GameStop as a potential target for a downside bet on the stock price in the second half of 2020. These funds shorted GameStop's stock in a big way in order to profit when share price fell further. What does it mean to short the stock? It is selling borrowed shares with the hope of buying them back later at a low price. It can be done by both large funds and small investors. It is actually the opposite of a buy order, that is sell short. GameStop's poor performance. Hedge funds have discovered that GameStop, a US retail company specializing in the sale of video games, consoles, gaming accessories and electronics, is showing weak market performance and their share price is likely to fall. The company was in trouble and hedge funds were looking to cash in. Betting on stock decline is not unusual for hedge funds. Why did Reddit short squeeze GameStop? On the Wall Street Bets subreddit, known for its speculative investing and financial market discussions, stocks started to get discussed. Thanks to Market Profile, this information is available to anyone. Users have been discussing ways to reverse the expected drop in stock price and create a so-called short squeeze. That is a situation in which stock prices increase dramatically and investors who shorts are forced to close out positions at a higher price and at a loss, further boosting the stock's growth. How have retail investors reacted? With a massive increase in interest in Wall Street Bets, retail investors on Reddit decided to take action. They organized and started buying GameStop stock en masse. This collective buying was intended to create a counterpunch to hedge funds and their speculative bets on the price drop. As a result of this effort, GameStop's share price began to rise sharply in January 2021. Media and social media picked up on these events and spread news of the GameStop phenomenon and the rise of retail investors. Information about these events spread quickly, even outside the financial community on Reddit. It sparked even more interest and involvement from other people who wanted to take advantage of the market opportunity and ride the rapidly rising share price, just to ride the trend. What happened with Robinhood and GameStop? During this GameStop stock price boom, Robinhood took controversial action. On January 28, 2021, the Robinhood app took the step of restricting the purchase of shares of GameStop and some other similarly affected companies. This meant that users of Robinhood app could not buy these stocks, only sell them. This restriction on purchases has sparked a strong wave of discontent and criticism from retail investors.
After getting locked out of accounts where they buy and sell stocks. Matt?
Yeah, Mike Dinney, the company is called Robinhood. You've probably heard of them.
Investors claimed that Robinhood was protecting the interests of large hedge funds and institutional investors at the expense of small investment players. Some speculated that Robinhood was under pressure from large financial institutions to limit its purchase of GameStop stock to prevent further price increases. Pressure on Robinhood also arose from politicians and regulators who demanded an explanation and investigation into whether there had been market distortions or undue manipulation of small investors. Is GameStop a pump and dump scheme? Some traders and pundits call trading in GameStop shares a pump and dump scam. So far, there is no evidence to show that GameStop is a scam, but the situation raises questions about share price manipulation. Pump and dump is stock price manipulation scam. The basic principle is to create an artificial interest in order to increase its price and then dispose of the purchased shares at a profit at the expense of other investors. Fraudsters spread false information or promises about the potential returns of an asset. Once they have succeeded in generating sufficient interest and inducing investors to buy the selected asset, they begin to buy large quantities of shares themselves. This achieves an artificial price increase that may attract other investors who see growth and want to join. This increases demand and the price rises further. When the share price reaches the desired point, the fraudsters start selling their shares, creating selling pressure in the market. This leads to a drop in price that causes losses to other investors who joined at the peak of the rise. The fraudsters thus profit from the difference between the buying and selling price. Who won and who lost in the GameStop scandal? During the events surrounding GameStop, many small investors got involved in the GameStop bet. Some of them made significant profits while others ended up with losses. Kate Gill, also known as Roaring Kitty or Deep Value, was one of the key figures on the Wall Street Bets subreddit. He shared his analysis and beliefs about the potential of GameStop. Gill invested a large portion of his portfolio in GameStop stock back in 2019. He made huge gains thanks to the rise in GameStop stock price. His story became an icon for retail investors during these events. Redditors on the Wall Street Bets subreddit. Many other users on the Wall Street Bets subreddit also invested in GameStop. Some of them made significant profits because they were able to buy shares at a relatively low price and later sell them at a much higher price during the growth period. Small investors outside Wall Street Bets. Not all retail investors who choose to invest in GameStop were active on the Wall Street Bets subreddit. Some simply identified the opportunity based on media buzz and decided to invest in GameStop. How were hedge funds affected by GameStop? Hedge funds faced huge losses. The exact amounts of the losses are not publicly known, but some estimates speak of billions of dollars in losses. One of the worst affected was Melvin Capital Management, which came under a lot of pressure and was forced to accept an injection of funds from other investors to maintain its portfolio. How much do hedge funds profit from GameStop? Some funds have profited very well from the price rise. One of the most profitable hedge funds was Seven West Management, which anticipated the price increase and invested in GameStop shares. Because the stock price rose significantly, the fund made a huge profit, reaching $700 million. This single trade was the fund's most successful trade in its entire 25-year history. What did the SEC, Securities and Exchange Commission, do about GameStop? During the events surrounding GameStop and the speculative activity in the market, the Securities and Exchange Commission, SEC, the US Federal Financial Markets Watchdog, played an important role. It was responsible for monitoring the situation and applying existing financial regulations. The SEC actively monitored GameStop-related events. In cooperation with other regulators, including the Financial Industry Regulatory Authority, FINRA, it was essential that the SEC get a complete picture of the events and their impact on the financial markets. In this context, the SEC issued public statements emphasizing its interest and a readiness to act in the event of violations of federal law. It has strongly urged transparency, fair trading and compliance with relevant laws and regulations. Subsequently, the SEC launched an investigation to determine whether any violations of rules and laws occurred during these events. These investigations focused on various actors, including hedge funds, traders and other entities that were involved in speculative activity. Impact of the GameStop scandal. This case was extremely controversial and sparked a wide debate about market transparency, regulation and the impact of small investors on the financial system. Some argued that it was an act of collective investing and an equal response to the speculative tactics of hedge funds, while others saw it as market manipulation or even playing with fire. The GameStop case was thus one of the most memorable events in the financial markets. It raised awareness of conflicts of interest among small and large investors and drew attention to potential flaws in the regulation of financial markets. If you are passionate about the GameStop story, I have a tip for you.
It's like this crazy group of people who saw people losing tons of money and making tons of money.
They loved the game.
I don't even know the last job I had.
The GameStop theme was covered by Netflix in documentary format and can be found under the title Watch Eat the Rich, the GameStop Saga. That's all for today's video about the GameStop scandal. If you enjoyed the video, please give it a like and maybe start subscribing to the full Invest with Jiri channel as well. Have fun, invest wisely and stop looking for shortcuts.